Hi guys, and welcome to Freckle Finance. Today I'm going to talk to you about ETFs, just as I promised. ETF, which is short for Exchange Traded Fund, is similar to a mutual fund except that it is traded on the stock market, and it generally is a lot more similar to a mutual fund that follows indexes. So if you watched my last video, you will know that index mutual funds are the best value mutual funds that you can get. So this is an even better version of an index mutual fund, basically, that is traded on the stock market. The main attraction of ETFs, much like a mutual fund, is that there is a lot of diversification. So you will be invested in many different industries, just like a mutual fund. However, the big thing about ETFs that make them better than mutual funds is that their fees are even lower. So if you thought the 1% index fund rate was low, ETFs, some of them might go up that high, but most of them don't come anywhere close to that amount. In most cases, and most companies that you would go to buy an ETF through, you do have to pay a fee to buy ETFs, and for those cases, you would want a lot more money before you are investing in ETFs. However, if you're comfortable, I personally use Questrade, which is a self-directed online brokerage, and it's free of charge to purchase the ETFs, and you pay when you sell them. So that would be another difference between mutual funds. You don't have any cost into them at all. It's all built into your fees. However, it's still way cheaper with an ETF, especially if you can pay for them when you sell them, because you will sell them in a clump much later on when you've made tons and tons of money on it and you haven't been paying those extra percentages the entire time of the investment. So from what I've seen, most ETFs, or the ones that I've looked into anyways, the MER fees are about 0.2%. So that's less, mutual funds were like 2.42 on average. This is 0.2% or lower. There is definitely lots that are even lower than that. So I want to compare an ETF to a mutual fund for you guys. So I'm going to compare the CIBC Canadian Index Fund with the Vanguard FTSE Canadian Index ETF. Now, I know those words are quite a mouthful, but I just wanted to put them in there, which funds they were and ETF they were, just so that you can look them up later if you want to. But essentially, they are very similar accounts. If you go and look into them further, you can get their top 10 holdings, so the biggest holdings that they have, and the first 8 in order are the exact same ones, and then for one of them, 9 is 10, and then the other one is just a different one. But basically, they are very similar funds that you would put your money into. So first of all, they don't have the exact same holdings all around. The ETF, the Vanguard one that I stated, it has actually made 7.59% last year, since last year, that's what it's made. And the mutual fund has only made 4.7%. And that's not even accounting for the fact that the mutual fund is charging 1.11% and the ETF is charging 0.09%. So there is a huge difference in these fees here. So not only is this ETF making even more money than the mutual fund, but it is actually charging you less fees, making your gains even higher. So when I started saving money for retirement or just my future in general, I didn't even know really what ETFs were. I did have a bit of an idea, but I hadn't really looked into them. I started with mutual funds, and this is actually one of the mutual funds I started with. It wasn't the very first one, but I, within 2 months, switched to this mutual fund, the CIBC Canadian Index Fund. And then when I really looked into ETFs, I was like, this is ridiculous. Now, that's not the ETF that I did buy. I did buy a slightly different one, but still quite similar holdings. But that was the comparable ETF, so that's why I put that one in this video. But yeah, so I'm pretty happy with it. I pay very little fees. I think overall for all my ETFs, the average is basically like 0.17% that I pay on all my fees, which is still much lower, and I have more than one ETF as well. And because I use Questrade, I did not pay anything to buy except for an ECN fee. It's extremely, extremely minor. It costs like less than a penny usually per purchase or trade. As well, I have yet to sell any ETFs, so I haven't had to pay any extra money into purchasing my ETFs and selling them. So basically my money has just I've made as much money as I can off these because my fees are very low. So, as a recommendation, if you think you're good with self-directed accounts and you want to kind of look up into Questrade, I would recommend skipping mutual funds and going straight into ETFs. However, if you're still wanting someone to kind of help guide you by using a bank or another financial institution or whatever, I would start with mutual funds, and then when you have enough money to afford, say like it's usually about a $5 fee to purchase or whatever per clump, like it's not you buy one and you pay $5, it's usually everything that you buy in that one item will be $5 or whatever. They have different fees at different places, but I would recommend that you go that route. But after you have maybe $25,000, $50,000 or so would be when you would want to start going into ETFs if you're not okay with self-directed. But if you are okay with self-directed, then I definitely recommend straight away getting into ETFs. If you find these videos interesting and informative and you want to learn more, please click subscribe, as I'll be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.